So yes, we've begun recording, and if you guys pay attention to the highs right now, it will be clear if you guys use the 15-minute time frame, right? You will see that there is sequential SMT between. Let me just go and show you guys. There is sequential SMT between, I believe it's the morning session and the PM session, which is why we're having price fall right now. So ultimately, right, it is, well, it should be, pretty obvious. Let's not say that. Let's not get too cocky, right? We should expect lower prices now due to the fact that, we have had, blown through all-time highs for the E-mini S&P and the NASDAQ, right? And currently, the NASDAQ and the E-mini S&P, they'll be trying to get back in sync with the Dow, right? Which is, you see, right now we're having price fall, right? And, it should be obvious, the direction, it should have been obvious before the fact, right? The direction that we were going due to the fact that we were interested in, having these highs completely blown out. And then, of course, after that, we wanted to see price return within the range, which it is, on the way to do right now, right? So there's one of two things that can happen. It can just drop now, or if it retraces back, within the range, and tomorrow we will have some sort of cracking correlation, which would cause price to reverse. Do you understand? Right here, it's very obvious, the direction in which price was supposed to go prior to now, while we're having this reversal. Right, that's due to the fact that we had, sequential SMT between Monday's low and yesterday's low. So yesterday in the S&P 500, we had Tuesday's trading take out Monday's low, whereas within the NASDAQ, that did not happen, right? You can see right here, looking at the NASDAQ, this low did not take this one out, right? And here you can see that we took this level right here, but you can see that we're falling, and that's due to the fact that the Dow is still weak, right? Which was indicated by a chart that I posted. The Dow is weaker than all of these, right, at the moment. Also, there was intermarket, sequential SMT as well, right? That was present as well. And, there is a reason why, at times you have the indices just, going, like this, higher, higher, higher. Even when it's in premium, it still has, it still goes higher. And that's due to the fact that there is something else that is going on behind the scenes, right? Which is, in my terms, what I call it is P&D differential, premium and discount differential, which occurs between two different triads, right? So it's usually kicked off by Friday's price action, most times than not, right? So like right here, now we're looking at the index futures triad. You can see that the, low of the week of the previous week was Monday, right? Evident across all the pairs, even though the Dow was lagging, right? But if you look at the FX triad, right, the low of the week and don't mind, me using TVC right now. Capital.com has, a wick below this low, but it really doesn't matter, right? It doesn't matter right now for this anyways. I could use the Kepler.com's data, which would, give us or yield the same results which I'm trying to, give right now. Okay, first, before going forward, you can see that we had took this high out, which is why we're having this retracement, right? This is sequential SMT right here, right? This is between the first week of the month and this month, right? So obviously you can see that we're above the true month open, right? And you know the rules for that. So we took these high out. Here we did not take this one out, right? And here we did not take this out either. And it's the same thing for the other asset classes, right? So, anyways, let's go back to what we were talking about. Right, the simplest form of, understanding premium and discount differential is, using the lowest low of the week, right? Which would be Friday for the FX trade. More specifically, when we're talking about the low of the week, the euro and the pound. So this would be Friday's low, which was the low of the week, right? This candle right here would be the low of Friday, right? And it is annotated by this gray line right here. So you can see that this week, right, when we opened, we fell below the low of the week, and we began to consolidate below the low of the week. The same thing happened for the British pound, and for the dollar index, we started to consolidate above the previous high of the week, right? Whereas within, this segment of price action, we were nowhere, close to the low of the week. So we opened this week within the premium of the previous week, whereas, here within the euro and the Great British pound, we opened this week within the discount of, these pairs, the euro and the British pound, right? So they are in, opposing, ranges, or partition of the ranges, which are premium and discount, right? So this is one of the reasons why we expected higher prices, because whenever we have something, such as this happen, we usually get expansion afterwards, right? Which is usually followed by retracement, okay? And due to the fact that Monday, and I believe that someone asked a question in the group yesterday, and I posted it, and responded to them. So there is something that you must understand, right? I am very careful with my words. I'm very careful with anything that I choose to say. So I will not say something or respond to something that I think one of you guys can respond on your own, or, one of your companions, one of your colleagues can help with, right? Whether it be a admin or, anyone that's in the group that's, proficient in the things that we talk about. So yesterday, someone asked, why did myself fail? I pointed out to the fact that we have sequential SMT between Monday and Wednesday, right? So we have sequential SMT between not Monday and Wednesday, Monday and Tuesday. Sorry about that, Monday and Tuesday, right? And this is why we had price going higher. But why did we have the E-mini and the NASDAQ expanding like this? And there you can see where prices fall. And if you're on the lower time frame, you can, it should be easier, clearer for you guys to see. Anyways, right, why did we have this expanding? Why did it expand like this? First of all, we did not take the low out of, the previous, Friday. That low wasn't taken out at all, right? So here we had price above Friday's low, and that's where we had, the sequential S&P occur for the S&P 500 and the NASDAQ, right? But, for the Dow, and as we have, been talking about the Dow isn't really the best thing to be focused on right now, right? As you can see, it's visually consolidating, right? But, it could have helped us out anyways, right here, where you see that we took out the previous Friday's low. Well, these did not, right? So this was a sign of the expansion, right? Before it even happened. That's why we were focused on, this high, which we said whenever price trades above this high, these highs, we're going to expect some returning back to, within the range. Right here, you can see that we already have, sell side liquidity, perfectly placed already for price to return to, right? Looking at the S&P 500 right now. So this right here is our, this is sell side liquidity. That's sell side liquidity here. You can see these lows right here. That's sell side liquidity as well, right? So the only thing needed right now for price, drop back within the range, and whenever that happens, that will be the perfect time, right? Because trading within a range is better than trading outside of a range. It's actually harder to trade above here, whereas we don't have any, high time frame P area, which ultimately we don't need, because you can see that we're having price, doing what we expected, right? But it's just easier to navigate, within a range because you have more liquidity pools to attack. Let's say that, right? So we have sell side liquidity here and here, right? Personally, if I took a long here, and got out anywhere here, I would basically, if I'm short here or short anywhere above here, right? I would basically add my stop at break even, and if I got stopped out, I just wait until the price fell back within the range, because there's a ton of liquidity below the current price at the moment, right? So, right, and I don't know if you guys haven't, gotten the gist of, how to expect CPI moves, right? First of all, remember, we expected price to go above this high, so that was, totally, you already know. You should have known that this was going to happen. And remember what I said before, right? Whenever we have, first of all, the low of the week placed before CPI, which is confirmed by sequential SMT, right? So this right here is the low of the week so far, right? Before CPI, if this happened, remember, CPI does not typically give you this sort of Judas swing. CPI will not do this. Right? CPI is not going to take out the previous day's low and go higher. CPI is just going to expand, right? That is what CPI does. It just expands in one straight line. If there was a high placed here, whereas, Tuesday took out Monday's high, if that had happened, then CPI would have done what? Just dropped in one straight line. That's what CPI does, right? So the direction of CPI is can be confirmed before, right? Even a day before, right? As long as we have, sequential SMT right here. And here we had, intermarket sequential SMT as well, which we'll be looking at. Then we're going to get this move, right? And usually, right, whenever we have sequential SMT like this, and it falls within, a wick such as this, right? And we have P and D differential, whereas we have the S&P 500 in premium, in comparison to the previous week's data, and the Nasdaq same in premium in comparison to the previous week's data, and then we have the euro, right, in discount, and we have the Great British Pound in discount. Then we're going to get this expansion, right? Here you can see that we had the dollar index take Monday's high, and this is the, textbook AMD, from the YouTube video, right? This is the textbook AMD where we have Monday's high taken out, trading above the true week open, right? So this was the true week open, which is where we did our last stream, right? Which I like doing those streams because, that's the most important, for the week, of course, piece of data, the true week open, right? This is what you get when you acknowledge it, right? So, me doing my streams at that time, is very good in my opinion, because it forces you guys to, well, some of you guys that do nothing until I say anything, right? To literally wait until this segment of data is established. So here we have what? The true week open, right here. Price traded about the true week open. What happened here? Tell me. We had sequential SMT and intermarket sequential SMT at the same time, right? So here, while we had price taking out this high and price taking out this low, for the Great British Pound, it did not take this low out, but the Euro did, and the US dollar index took its high, right? This was sequential SMT. Also, you can see that, of course, we had the P&D differential where we had the Euro establishing its low of the week below the previous low of the week, right? Whereas the data within the index futures triad, could not, mirror that effect. So here, right, you can see the sequential SMT here, but for you to see the intermarket sequential SMT at, a higher level, you have to go to the bond futures. So here, and you can also see here that we are falling, right, as well, just as how, we expected right here. And also, we're going to be falling right here as well. And within the Euro and the Pound, of course, we're going to be falling. So another thing that you should understand is, whenever you have, and this is specific for the weekly cycle, which is comprised of days, as you know, right? Whenever we have sequential SMT, right, which was put into place by the premium and discount differential, right? We're going to get expansion, and after the expansion, we're going to have price align. So the alignment of price is not always there, right? Because there are times when you'll be looking at price, you'll be looking at the Euro, you'll be looking at the S&P 500, comparing them, and they're not going in the same direction, right? This is fine. Okay. So here we have an expansion of price, and then we have price retrace. Also, you can see that this is also an effect or a, this is following the Great British Pound as it has reason to return back within the range. Why is that? It took this high up, right? This is sequential SMT, right? It took this high out. The Euro didn't do that, and the US dollar did not take its low. So this signifies a reversal of price, right? Which is something that usually happens whenever you have this type of price action, right? You have price, rally, create some sort of consolidation, play around a bit, take a high, then drop. So the thing to take away from this is the premium discount differentials, right? So what is it? Okay, first you have, price on sync, right? Between two pairs of, two triads, on syncing. Everything usually follows the T-bond futures, right? And remember that the move for CPI is established before the fact. Whenever we have sequential SMT and intermarket sequential SMT at the same time, and remember that's important, you should remember that it should happen at the same time, we usually have this imbalance right here left unfilled. Do you understand? So this imbalance right here is not going to be filled. And remember that CPI is one straight move, so you wouldn't expect it to fall back within this, either way, right? So even your stop would be safe here due to the fact that it's CPI, right? So here you can see that we have an immense amount of liquidity left above the highs formed by CPI, which are usually revisited to, before the course of the week, right? So below these lows here for the Great British Pound, there's liquidity, and a large amount of liquidity, right? And remember the magneto effect, right? Here we have sequential SMT and intermarket sequential SMT. Here we have a cracking correlation as well, right? So we can see, price form some sort of cracking correlation, and whether it's a precision swing point, right? It's important to note that you would like to see at least, sequential SMT between, the weekly cycle or between the daily cycle, nothing lower than that before you see a reversal, right? So pretty much that's it for now. The week has, in my opinion, unless we see sequential SMT tomorrow between tomorrow's price action and this week's price action, it's best to wait until price is back within the range, right? We're literally at all-time highs again, which is insane, right? We're at all-time highs again. And right here it was, pretty easy to, anticipate this due to the fact that we had, the P&D differential and sequential SMT, right? Which was, ultimately coordinated by, price falling below the true open, which is very important to understand and very important to take note of. So we will be back, of course, this Sunday, the latest. There will be another model posted, which, you should study, and, something else, another image posted for you guys, but it will be posted to WAP. So please don't believe that it will be posted here. Make Mohammed admin. Okay, sure. I will. All right. So I hope that you guys found this useful. And I hope that you're studying, and oh my God. I hope that you're taking everything into consideration that we have talked about so far, right? So it's not just a true open. It's not just sequential SMT, right? For a reversal to occur, there must be three things, right? There must be a true open present, right? If you're bullish, price should be below it, of course. If you're bearish, price should be above it, of course. Then there should be sequential SMT and intermarket sequential SMT occurring at the same time. So now we really need to look at, that. We need to see what that looks like. The easiest way, in my opinion, to do it right now is comparing, the Great British Pound, the T bond futures, and the E-mini right now. So this is essentially, the building blocks of everything, right? First of all, the P&D differential is there, right? Is there. This is in premium of the previous week's range. This is in discount of the previous week's range. This is in discount of the previous range, the T1 futures. Then here, what do we have? Here we have price failing to fall below Monday's price action, right? And this is the Great British Pound. here within the T1 futures, this is the same price action that presented itself, within all of the members of the interest rate triad, right? We have price failing to fall below Monday's price action as well. Here we have price fall below this price action. This candle instantly, this down close candle, right? And this is the 1 hour time frame, which is specific to, right? Once you see this happen, right, and this candle closes, this one opens, you want to be buying in this candle right here. So this is actually what I would consider, a actual order block. And it's after all of this happens, right? So it's after everything right here happens. This down close candle. Also, what else is there? We are below the true week open, right? We're below the true week open. So below the true week open, there is, and I have to label this, right? I give you guys permission to take a picture of this one. Like you can screenshot this one, it's okay. This one, okay. This is important. Right, it's like we need to stop, some of you guys are confused and you need to stop being confused, right? This is what you want, right? If there's an order block, you can use it like this. If there's not an order block, which there will most likely be, use the fair value gap, right? So it doesn't matter if there's this down close candle. Remember, this down close candle must be the last candle, right? Before we have, this swing move. So this down close candle is the one that should cause the sequential SMT plus the intermarket sequential SMT. You want to use the asset that takes the low, right? You don't want to use these ones, right? As you can see, price expanded on these ones, but they're weaker, so you can see that they fall more and, much earlier than this. So here we have what? Sequential SMT, and people will not understand this. So even if you screenshot it and you look at it, they still will not understand what the hell they're looking at. So first of all, we're below the true open of the week, right? This is the 1 hour time frame, which is specific, right? You gotta be using the 1 hour time frame for the true week open, right? So there's a 1 hour time frame. Then we have sequential SMT and intermarket sequential SMT. And for this, you do not need to do what? You don't need to be, looking at a higher time frame sequence at all. You just need to be looking at the other 2 main triads, which there are other triads, of course there are, which you guys will get to know, whenever it's time, because some of you guys will, there's this one guy that complains that it's too much information and you keep giving us new information. That's the thing. You don't want new information. That's what you pay for, new information. So this is the perfect, model for, trading the weekly range. What's something that you see that is important? What's something that I've been doing on and off for the past few weeks? Starting, the stream at this exact time where the true week open has been established, right? So when true week open is established, you wait for manipulation. And what causes manipulation? Manipulation is not just price trading below and tagging a low. That is not manipulation. That is nothing, right? Because if all of these assets are doing the same thing, then price will just continue to fall. The only time the cracking correlation happens is when price falls below a true open, trades below the low of the previous day, while another asset failed to do so. So here you can see that we had the E-mini S&P 500. There was a cracking correlation between the E-mini S&P 500, the Great British Pound, and the T-bond futures, which means that this cracking correlation occurred across all three of these charts. There was a cracking correlation, which is something to take note of. It could have occurred between just one, but here it occurred between both of them. That equates to higher probability moves. So it's not just, okay, it just happened between Great British Pound. I shouldn't look at this one. There'll be a time, whereas, well, of course, personally, I have to be looking at, all of, like 3 different sets of assets. But there'll become a time whereas, it'll be very easy for you. Right? And, maybe there's someone that's so smart that can create something that, tracks all of them at the same time. And, there you get the SMT, sequential SMT, and the intermarket sequential SMT. So this is, very important, and this is a model in itself, and this can be, used down to the lowest cycles that you can, imagine, because it's all fractal, right? There's none higher. You can't even go down to the milliseconds, right? You can go up to many, many, many years, right? It's all fractal, and it functions the same way. I hope that you had, what do they call them again? You had ideas, shared with you that can help your trading. I hope that you understand this, and I hope that you put it in, your arsenal, your trading arsenal. And until I talk to you guys again, have a wonderful day.